Good morning. Welcome to Stock Market Today. It's Wednesday, January 30th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email. You'll be able to follow along with this show. We'll give you daily stock ideas to consider. Hit your inbox every day before this show airs, certainly before the market opens. So head on over there and check it out. It's free to sign up. U.S. equities were mixed to lower on Tuesday as the Dow finished higher while the NASDAQ underperformed. Industrials and materials led while tech lagged again. Treasuries were stronger across the curve. Dollar was little changed versus the euro and yen, but stronger against the sterling with the Brexit developments. Gold gained 40 basis points, and WTI crude saw a nice rebound, up 2.5% after a 3% plus decline on Monday. So your outperformers, industrials, materials, REITs, and healthcare. Your underperformers, comm services, tech, discretionary, and the financials. As we get to the desk this morning, S&P futures are up 30 basis points, helped in part by Apple beating lowered expectations. Asian equities were mixed overnight. Japan and China lagged, while South Korea rallied. European markets are mixed as well. Treasuries are slightly weaker. Dollar is stronger versus both the yen and euro. Gold up 20 bips, and WTI crude adding on, up 70 basis points. And as we dive right in, I'm calling the S&P 500 right now stuck in a tight range for now. You can see it kind of here between 2,600 and 2,675, just bouncing back and forth in this range. Remember, the 50% retracement level of this entire move lower is right in here as well, around 2,650. 2713 would be the 62% retracement. You have the 200-day moving average. A lot of ebb and flow, push and pull. Earnings season coming out. Less bad is being rewarded. Bad is being hit. Stocks that look like they're going to break down, such as Whirlpool yesterday and Pfizer, snap back and rally. Stocks that look like they're going to break out tend to fall back into their range. So I've been saying for a couple days now, and I continue to believe this, that the pain trade, in my opinion, would be to just sit here and grind, to go sideways. There's the camp of people who think we're going to retest these December lows. And there's a camp of people who think we've gotten the all clear and that we're going to be off to the races here. And that seems to be, just based on the conversations that I'm having, that seems to be the bifurcated view of the market. And to me, the most pain would be inflicted by doing what we've been doing here for the past week and a half. So support, 2625, then 2600. Resistance, 2680, and in the 2700 to 2735 zone. RSI continues in bearish ranges, actually turning down here again without becoming overbought. Chaikin money flow is bullish, but an interesting nuance on this, and Mark Chaikin actually came out and pointed it out to our clients during our Monday client call. This sharp move higher in money flow is a function of these days back here during the depths of December rolling out of the calculation. So while strong money flow is a positive, it's a little bit accentuated at this point just because of the degree to which this dropped into December. So just bear that in mind. It's an interesting thought, but money flow being positive, we certainly can't argue with that. So your market in a minute. What am I talking about today? Stocks closed mixed in a quiet session. Major markets remain near key resistance levels. Like to take a midweek market look. We'll take a look. KBE, that's the bank ETF, nears a breakout as banks outperform. Sentiment gradually moving towards greed. Not a ton of change here. It's very incremental. We're not even going to touch on it today other than I'm going to point it out. And I do write about sentiment in my note on Wednesdays, which if you're a Chaikin Analytics client, you should be receiving. Futures do point to a higher open, as I said. Now, your power bars for the major markets. Dow was the only index to close higher yesterday. 4 bulls, 9 bears. S&P, flattish performance, 84 bulls, 111 bears. NASDAQ, big underperformer on the day. 20 bullish or very bullish stocks, 26 bearish or very bearish stocks. Small caps, down 21 basis points, a slight underperformer, 349 bulls, 409 bears. Nice tick higher in bonds, sends yields lower. Industrials had a nice day Bit of a rebound after the Caterpillar print on Monday, but still 10 bullish stocks, 20 bearish stocks skewed in favor of the bears by 2-1. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bearish. Major markets relatively mixed. Stock of the day today. Every day we look at a different stock. Now this is auto-generated by our algorithm, and I put it in here. And sometimes it's actionable, sometimes we want to wait, but it's always helpful to walk through the analysis. Hub Group, transportation company, closed at 44.30, up 61 basis points yesterday. Very bullish stock due to very strong earnings performance, attractive financial metrics, and positive expert activity. Each of these 4 categories contains 5 factors for a 20-factor model. When we roll them up, we come out with that very bullish rating. So let's walk through the analysis. Very bullish stock, strong trend, but a weak industry group. Here's our very bullish rating. And the market and model just getting into agreement here. You can see the stock's been gradually outperforming, or, the intensity of underperformance was dampening. And now it's breaking through here ever so slightly, beginning to outperform. On its way to an oversold reading. Money flow is bullish. Stock has regained the long-term trend line. This is kind of an in-betweener for me. I think it looks interesting. What would be interesting to me would be continued outperformance and then overbought, oversold indicator beginning to turn higher without ever becoming oversold. That would be a sign of strength to me and would get me interested in the name. I'm adding it to a bullish watch list now. Not quite want to get involved just yet. If you're on the aggressive side and you want to pull the trigger here today, I can't argue with it. The weight of the evidence supports being long the stock. I still favor just being a little bit more selective given the choppy market environment. Now, your sector tracker, moving over the last 5 days. We talked about real estate yesterday. It remains at the top of the list, continues to outperform. Industrial, strong day yesterday to rebound from the CAT print on Monday, keeps that stock in the number 2 spot. Materials is actually one of the most interesting groups to me. I'm keeping an eye on it closely. I write about it in my sector work. Starting to see some rotation into materials as the dollar has been declining, which has helped the commodities, also helping the emerging market economies and the emerging market stock markets. If you can look at EEM as a composite, a lot of folks are starting to talk about EEM. I prefer to look at the individual names. Let's find out what countries are most correlated. But start to think about Asia. Start to think about parts of Latin America. I wrote about Latin America in my note on Monday. But to the extent that the dollar continues to weaken, and it has a big test around the 200-day moving average, I would expect materials to outperform. Healthcare, bottom of the list. We talked about it yesterday in our sector work, breaking through a key relative support level. Now it's at the bottom of the list. Comms and utilities round out the bottom 3. Tech, middle of the road. Apple print last night, likely to help the tech sector. AMD print last night, likely to help the tech sector as well. Biggest weight in the index, want to see that one outperforming, and let's talk about it. Innovative technology. Over the past 6 months, this subsector has outperformed the S&P 500 by 2.73%. Power bar ratio measures future potential is strong. Is 18 bullish stocks, 16 bearish stocks. So strong is when more bulls than bears. Currently ranked number 9, 21 subsectors. It has moved down 2 slots over the past week. Some of the indicative names there: Symantec, SYMC. We've spoken about that one here in the past. MKS Instruments reported last night. A bit of a mixed picture on their numbers. Also want to point out that they are in the process of buying another company, ESIO, Electroscientific Industries. So a little bit of moving parts there. So why don't we just look at AMAT? Because this one's starting to look compelling to me. Bullish stock, strong trend, strong industry group. Intensity of underperformance lessening, but not quite outperforming just yet. But look at this. Never became oversold before started to move higher. Breaking this downtrend line, retakes the moving average, riding the upper volatility band. To me, I want to see a retest of $35. I want to see this stock begin to outperform the market. If one or both of those factors comes into play, then this starts to look interesting to me. A little bit of a breakout here. Yeah, I mean, if you're a breakout trader, I can't argue with you buying AMAT. If you like to wait for everything to kind of line up, we're not quite outperforming just yet. Money flows bullish. long-term trend line going from declining to flat, seeing a shift, a change of character in this stock. It is compelling. Keep an eye on AMAT. If you want to play the aggressive long side, you can. I want to see a pullback and retest at least of this $35 level. And if not the $35 level, if the trend line starts to move higher, I want to see it hold that trend line. So yesterday's trending names, mostly earnings related. The entire leaderboard here is all earnings related. And I mentioned Whirlpool because Whirlpool actually opened in the hole and then snapped back to rally. That's what I'm talking about. Everything else here, earnings related. It's pretty much the same on the loser side of the board. Allergan down 8.5% on earnings. Harley-Davidson down 5.5% on earnings. NVIDIA was follow through from the previous day's selling. AMD down in sympathy with that follow-through, but up nearly 10% this morning following their earnings announcement last night. And I didn't really see any news on Twitter, the stock, to send that stock down 4.5% on the day. So a lot of what we're seeing here is, less bad on the earnings front is being rewarded. Bad is being hit. Stocks are some stocks that are getting hit in the morning are snapping back. I think it's just interesting action. Kind of lines up with this churning thesis that I'm starting to develop. eBay beats by 15 cents. 2 activist investors involved there. AMD missed by a penny. Less bad than feared. Sends it up 10% in the pre. Triple LLL beats by 44 cents. HCA beats by 40 cents. Rockwell Automation beats by 23 cents. That may continue to help the industrials group. Before the open, we're going to hear from Boeing and AT&T. AT&T actually trading slightly lower. After the close, Hologic, HOLX. That's the bullish names. Neutral names that people are going to watch: NASDAQ, McDonald's, Anthem before the bell. Going to watch Facebook, Microsoft, PayPal, and Visa, all neutrally rated after the bell. Bearish stocks before the open: Franklin Resources, Ben and Hess, Qualcomm, and Win after the close. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's talk about it. Let's run through the midweek market update. We looked at the S&P 500. Similar dynamic at play here for the Qs. The Invesco QQQ Trust, our proxy for NASDAQ 100. Hit the 50% retracement level, and now we've kind of churned and gone sideways. If we wanted to, we could draw these trend lines and call it the same thing that we saw in the S&P 500, churning in a tight range. What's interesting to me, though, is that the 62% retracement level lines up pretty closely with this 200-day moving average. So still a lot of resistance to overcome to the upside. Similar dynamic for Chaikin money flow as we were talking about for the S&P 500. As these really, really weak days roll off, you got this spike in money flow. But to me, the real issue still remains the lack of momentum. RSI cannot become overbought on these thrust move higher and beginning to actually roll over again. Now, I would expect the Qs to be strong on the back of Apple today, but you still have some formidable resistance here, 165 and then 170. Let's look at the Russell 2000. Similar dynamic at play. 145 to 150 is a solid resistance zone. We've bumped our head on it twice. Bullish money flow, but lack of momentum below the 200-day moving average. So our midweek market update, really a lot of symmetry at play here across the major markets. But again, one view is that we pull back and retest. Another is that we continue to break out. And I say, remember, there are 3 trends in the market: up, down, and the most painful, sideways. Because we can trade an uptrend to the long side. We can trade a downtrend to the bearish side. That sideways chop is the most frustrating type of market. And I feel like right now, that is what would frustrate the most investors. Take a look at the banks here. KBE, the SPDR S&P Bank ETF, on the verge of a breakout. I didn't throw the line in here because you can pretty clearly see that 44 was a key resistance level. I think a break of 44 could target 50 pretty easily. We've retaken the 50-day moving average. We'll have to contend with the 200-day moving average, but look at the difference here. Look at how on this thrust move higher for the banks, RSI actually did get overbought. That's what I'm talking about. That confirms, that's a momentum confirmation to the strength to go along with the bullish money flow. We're not seeing that at the index level. Sign up for the email. I will see you here tomorrow. Have a great day, everyone.